Pre-retirement planning is one of the most challenging stages of the financial journey. You're still fully engaged in your career, but you're also looking ahead to a big transition that will see you shift from accumulating to spending your retirement savings. Retirement means you'll be making choices. Where you want to live, what your retired life will look like, how you'll plan your days. But you also need to figure out if you have enough saved to fund the retirement you want and how much flexibility you'll have. So, what's the key to figuring all this out? Cash flow planning. It can help you use the income you are making in the last few years to make good choices around when to retire and how to shift your income. There are a few important steps to take when it comes to cash flow planning. First, understanding the planning mindset. Cash flow planning is different than budgeting. Budgeting is about planning for scarcity. Cash flow planning looks at the short term and the long term and helps you make choices that are about abundance. It is a tool to help you make decisions that will help you achieve future goals. When you're in the pre-retirement stage, cash flow planning is particularly useful because it can help you see how your current spending will translate in the future. These last few years of income are critical to understanding and detailing your flows to keep your investments tracking. It also helps you become realistic about return opportunities and gets you thinking big picture, including minimizing taxes and protecting your assets. What does cash flow even mean? Well, it's pretty simple. Income minus expenses. That's cash flow. First, you want to get clear on your income, and by income we mean monthly net income after taxes across all sources, including salary, rental income, reliable investment income, etc. Next, you want to mark your expenses. This includes everything: debt, basic monthly expenses, discretionary expenses, insurance, and more. The goal is to get all down on paper or in a spreadsheet, whichever you prefer. Once you have your current situation in order, it's time to plan into the future. Spend some time identifying short and long-term goals and your progress between now and when you want to retire. If you feel comfortable with the level of your portfolio, goals for these last few years could be paying off your mortgage, funding 529 plans for grandkids' education, starting a new business for once you're retired, or even buying a vacation home. Developing and working towards goals is the essence of cash flow planning. The goals allow you to see clearly where you are now and where you want to go. Once goals are set, it's time to get into tactical planning and asking yourselves the big questions. Questions like, are you taking enough investment risk with your investments? Should you refinance debt or work to pay it off more quickly? Are you minimizing your taxes through tax-advantaged savings vehicles like health spending accounts? Should you diversify your income stream or invest in more tax-efficient sources of income, such as real estate? When deploying your cash flow planning strategy, it's important to do check-ins against your goals and tactics to get you there. As part of your cash flow planning review, you should look at ways to automate as much as possible. Your planning needs to match your life stage to keep growing wealth and staying on track as you move forward. Having a fiduciary in your corner goes a long way here. If you ever have any questions or would like to chat, would love the opportunity to meet and learn more about you and your goals.